Okay, so in this segment we're going to look at the impact of debt as it relates to trying to mortgage qualify. What you're looking at is a spreadsheet tool that I use with each person that I talk to on the phone as we go through interactively what you can qualify for and how debt impacts. So just looking at this very quickly, one of the first things I do is I ask the person on the phone, what is the house price in your area that you think you'd like to buy. So we'll use $400,000 as an example. This person's looking to get a purchase with 5% down, which is the minimum. We have, so $400,000 is the property price in this column here. And over here, we show that they are looking at what I call a red bar, or they're short on income, but of course we haven't input any data yet. So I'm going to do my math using interest rate right now, as it's approximately where it is right now at the time of recording this video. We're using the Bank of Canada qualifying stress test rate here. So as we start to talk, I first start to ask you a few questions about you and what kind of income you have, and also the income that your partner has. So let's say you have $5,000 a month or $60,000 a year. Let's say your partner can prove $5,000 a month as well. So now we have pinned down, you have about $10,000 per month in gross household income, or $120,000 a year. We then start looking at debt, and as you can see it's all green here, but watch down here as I start punching in debts. So let's say this person has one vehicle payment at $500 and another vehicle payment at $600 per month. You can see down here that the amount of home that they can qualify is now $490. It's going to reduce further when we give them some credit card debt. So we give $20,000 of credit card debt times 0.03 or 3% of that is the rule that we have to use for dealing with credit card debt. And it just about have no color left here. Let's say this person's got a student loan of $400 per month. We now have $2,100 per month in consumer debts. And as you can see here, they can no longer qualify to purchase a $400,000 home with these numbers. So let's have a look at changing the price. And I changed the price to $300,000, so that says, yeah, 300's in range up to about here. $345 is about the maximum property price that they can look at, subject to having the required down payment. As I've said before, your house gets smaller as your debts go up. Let's look at the impact of nuking a car, selling a car, getting rid of a car payment. I'm going to hit delete, and all of a sudden that $600 car payment is gone. The house that they can qualify to purchase jumped up to below $400s. So that's how the debt to income ratio is calculated. That's how debt impacts your ability to mortgage qualify.